Hey everyone, welcome back to the channel. My name is CJ and I'm a software engineer and investor based in Chicago. And today I want to talk about my key takeaways from Mohnish Pabrai's recent Q&A session with students from Clemson University. The three key areas I want to cover are Pabrai's take on impact investing, how macroeconomics has impacted his recent investment decisions in Turkey, and market bubbles including GameStop and Bitcoin. If any of that sounds interesting to you, please like the video and subscribe to the channel if you want to keep up to date with videos like this in the future. Also, I'll have timestamps in the video description below if you want to jump around to any specific point in the video. Okay, let's dig into Pabrai's lessons. Okay, so impact investing was something that I wasn't too familiar with. Impact investing is basically making an investment in order to make a measurable impact in a social or an environmental issue, all while achieving reasonable rates of return. So you're basically putting your money where your mouth is and supporting causes with your investment dollars. Pabrai is pretty clear on this. He says it's best to separate capitalism and philanthropy. On the investing side, he says it's better to focus on returns rather than making some sort of social impact. You can't really optimize for two variables, so splitting your focus is also going to water down your returns. He touched on how he has some sort of limits on what he will invest in, so he probably wouldn't invest in a tobacco company or a casino company, but he also admits that he's no saint. For instance, he's invested in Maotai, which is a Chinese liquor company, and he's invested in both General Motors and Fiat Chrysler, which are obviously no friends to the environment. But that isn't to say that he doesn't care about the philanthropic side. In his case, he has his successful investment fund, which is Pabrai Investment Funds, and he uses that as the compounding machine which fuels his philanthropic efforts with the Dakshana Foundation. His foundation helps underprivileged students in India study and excel in the medical and IIT exams, which are so important for helping students break out of poverty. So the bottom line is separate the two. Maximize your returns with your investing, and then be the change you wish to see in the world using that investment vehicle to fund philanthropic efforts. Next, he receives a question about what he thinks will happen in the coming years for the markets. The student's basically asking if he anticipates any dips or anything like that. Pabrai responds with what I think is one of the most important lessons of investing. Micro always trumps the macro. He doesn't have any idea what will happen over a period of 1 year or even several years. But because he runs a concentrated portfolio, all that matters to him is what happens to the handful of businesses within his portfolio. I think he has something like 8 total investments, 5 of which make up about 80% of the portfolio, so he is super concentrated. His only concerns are understanding the businesses that he owns and having some sort of understanding of the long-term trajectory of these businesses in the future. He gives an example of a company he recently invested in called Resas, which is the largest operator of warehouses in Turkey. I'm planning on recording a video covering the basic investment thesis for Resas, so subscribe to the channel if you want to be notified when that video comes out. But basically, when Pabrai invested in this company back in July of 2020, the value of the real estate was probably worth 10 or 15 times more than the entire market cap of the company. Additionally, at the helm of the company is a father and son duo who are great capital allocators that will continue to add value to the company in the future. Now, there were plenty of macroeconomic headwinds for Resas. The Turkish lira was on the brink of devaluation, the country's government is questionable at best, and foreign investors were leaving Turkey in droves. But in light of the fact that we have an obviously deeply undervalued company, did those headwinds matter at all? Certainly not to Pabrai. Mohnish owns 1/3 of the company, and the value of the Turkish lira has collapsed by 40% since he initially made the investment. But in dollar terms, he's up about 6 or 7 times on his initial investment. And it certainly looks like it's going to keep climbing. So if you have an obvious investment idea, the microeconomics of the business will always trump the macroeconomic conditions. Next, let's move on to his discussion about bubbles, GameStop, and Bitcoin. I included all of these together because in his mind and in my mind, they're all closely related to speculative situations. First, I want to talk about his take on the GameStop situation. He thinks that yes, it's a mega bubble, but it's also an unprecedented bubble. He gave us a little history lesson about past efforts of collusion. Basically, collusion is when a group of people gather together and intentionally drive up the price of a stock. Collusion is illegal, by the way. It kind of sounds like what's happening with Wall Street bets. But Mohnish's take is that what they're doing should be covered under free speech. There's a big question mark about whether or not this is actually even collusion. because technically these people don't know each other. And it is a virtual group, but does that make for collusion? Is a virtual community a group, and can they collude? But he thought the SEC would have a really hard time regulating this situation. He didn't know whether they should let it play out and let the hedge funds tank, or if there should be some halt to trading. However, he thought that any hedge fund with a short position in GameStop was in serious trouble. He said this phenomenon had broken some basic market functions, which is pretty crazy. Little did he know about the liquidity crisis that brokerage firms like Robinhood would face, which stopped all the momentum of GameStop's meteoric rise, possibly taking some of the tough decision-making out of the SEC's hands. He concluded that yes, there are bubbles in meme stocks like GameStop and AMC, or Robinhood stocks like Tesla, and in SPACs in particular. However, the market as a whole, while it was fully priced or maybe slightly overpriced, it wasn't in bubble territory. In light of the low interest rate environments and the potential that this low interest rate environment will continue for a while into the future, some of these valuations for companies like Apple and Google and Amazon could be justified in the future. Next, he gives one final note about Bitcoin. He said if given the option between buying or selling Bitcoin, he would choose not to own any Bitcoin. He said that there are too many speculative characteristics of Bitcoin, and he even touched on some of the oddities about Bitcoin, such as being able to be locked out of your Bitcoin account and people digging through landmines to find old digital wallets that may contain millions of dollars of Bitcoin. So he's saying that it's basically not as safe as you might think. He thinks as a medium of exchange, there is a possibility that Bitcoin could provide some value because money is simply a way to make exchanging goods easier between two parties. I love this. He uses the term, it defies logic if you think that an individual Bitcoin will be worth $5 million sometime in the future. But most importantly, he ties up this discussion about speculative bubbles with probably the most important lesson. You don't need to understand 99% of what's going on in the world. We only need to understand a handful of businesses in our portfolio to achieve outstanding returns. At both the beginning and the end of the Q&A session, Mohnish spoke about his recent transformation from buying 50-cent dollars to becoming a part owner in great long-term compounders. I talk more about that change in a recent video. You can check that out over here if you want to learn more about the transformation. If you enjoyed this video, please like the video and subscribe to the channel. It would be a big help for me going forward. I've linked the full talk in the video description below, so please listen to that if you want to hear all of Mohnish's wisdom. Let me know in the comments below what your biggest takeaways were from Mohnish's talk. I really appreciate you watching this all the way to the end. Thank you so much for watching, and I will see you next time.